Welcome back to Liberty and Finance. We're always delighted to have this widely followed and wildly popular returning guest. Andy Schectman is the CEO of Miles Franklin Precious Metals. He joins us for a really live stream right now. This is Wednesday, January 29th, 2025. Andy, thanks for joining us back on Liberty and Finance.
Great to see you, my man. Thanks for having me done again.
You were traveling, pardon me, you were traveling last week at the Vancouver Resource Investment Conference. You were taking a
Yes.
red eye back and everything, so you couldn't be with us. Pretty good excuse, I guess. Our
18
people,
hour travel day, man. Listen to this. Listen to this. This is the true story. Got up because we were in Whistler for a day and a half or 2 days skiing, and we had an 8:30 flight. We get picked up at 4 in the morning. A 2.5 hour drive to the Vancouver airport. We make our flight, no problem. We go to Houston for whatever reason. That's where we had to transfer through. 4.5 hour delay in Houston. By the time we finally got home, it was almost 1 in the morning Eastern time. So about an 18-hour nonstop day. So I love VRIC and all the people that are there. It's that and it's Rules Symposium that are the only two that I really focus on. But traveling from literally the bottom of Florida to Vancouver is about as sucky of a travel day as you can get in North America. So I wouldn't miss it for the world, my man. But this one I couldn't get away from.
well, we're always grateful for your presence here, and we want to make hay while we have you. So we've got a lot of people in the live chat. Right now, there's 107. They keep increasing. Usually, we end up with closer to 1,000 by the time we're near the end of the hour here. So we're going to try to get into it. The title that I put out there for today, and we will be getting to viewers' questions as well, but the title I put out there today was basically leveraging a talk that you gave at the Rural Symposium on Natural Resource Investing. I believe it was 2 years ago. You tell me if it was two or three in Boca Raton. I think it was two, where you spoke about the art of war and the BRICS basically doing what they had to do, but trying to do it on the down low so that it didn't didn't look like they were coming straight at the challenging the hegemony of the US dollar as the world reserve currency, because
Right.
those who had tried that in the past met unfortunate ends rather quickly thereafter. And so the consortium of countries that you've described to us just keeps on growing in terms of the numbers that are either officially part of it or asking to be admitted, et cetera, expressing intent, interest, whatever. And then just today, then just yesterday, I was sent, or 2 days ago, I was sent a link to an article by Catherine Austin Fitts from the Solari Report about a rather cautious take on the origins and outcome of Bitcoin, and talking about how there is mystery shrouding its origins, and there is a lot of hoopla right now coming from official Washington, D.C. presidential team channels and everything, talking about how we need to embrace it for this reason or for that reason. But she talked about serious questions, and it's heavily documented and footnoted about, do we really know that the 21 million is actually a fixed limit, according to Jamie Dimon and others? That's not. And do we really know how many of the original holders, how concentrated the hands are that Bitcoin is? Sounds like it's extremely concentrated to a large extent. And anyway, now that you've got approval, just knocking down barriers as far as saying, oh yeah, we're going to approve all kinds of new mutual funds or ETFs, so that sort of thing, that can have now retirement funds investing in it, and so mainstream mom and pops, Main Street can be taking their retirements and putting those into Bitcoin and everything. Sounds like this is democratization and it's good for everybody, or is it? She asks, and she asks in a very pointed way with lots of data points, another example of bailing out the very few by leveraging the funds of the very many. Then today I interviewed Jason Cousins a second time. Specifically, he's in the U.S. working with legislatures in Utah and other places to try to get uh, sound money, legal tender legislation. And there's now a consortium. Get this, it was 9 states, then it was 14 states, then it was 20 states, then three more are asking to be included. Have you heard this before? This this sort of story. And in here, that what these states are after is they're trying to get enough critical mass as a consortium that they can petition and get the Supreme Court to have to make decisions on such things as if they can prove that gold and silver are transactional, then they should not be subject to capital gains tax in the future because the IRS evidently said, no, no, it's not transactional, it's a collectible, and that's why it has to be that way, et cetera, et cetera. And also that people's savings and, frankly, the nest eggs of those states should be able and perhaps required by law out of duty to their people to be invested in something that preserves value rather than gets wasted away by the profligate, destruction of currency that's coming out of Washington and the Fed, et cetera. So I thought, wait a minute. You always have been teaching us for years now to try to connect the dots, to try to see the dots connected. And all of a sudden, I'm seeing this consortium of United States states and this consortium of non-United States countries, and they're all seem to be saying the same thing: is that we don't want to get rips off anymore. We don't want to have the value of our savings or whatever destroyed. We want to have something that's stable. We want to have something that doesn't require trust in a body that we don't trust anymore. So I want to unleash you on that question is, can you see parallels and help us understand? Because this seems to be coming to a head. Jason Cousins said, we ain't seen nothing like this momentum before. He says the last several years, and we've had Patrick Holland on from the Missouri Freedom Initiative talking about how, oh, there's this boilerplate legislation that multiple states are looking at and they're considering and they're studying, they're adopting and they're passing parts of it, et cetera. But now with Trump's election, it seems like there's a sense that the barriers are now moved out of the way. Let's rush and get this in while we can. So I wanted to give you a chance for a crack at that. Is it possible that there's a domestic consortium that sort of mirrors what's going on internationally that you've been talking about for years with the BRICS that's happening because they're attacking corruption from both from within and from without?
Yeah, I mean it's 100% Dunnigan, and you know, connecting the dots is important. Take a step back and let's all just for a moment try and realize that the people that pull the strings, or that the people that know the playbook, they have a playbook that allows them to do things, um, misdirection, allows them to do things in a manner that hopefully minimizes the competition. Um, we start by quietly reclassifying gold tier one. We then proceed to slowly draining the world's exchanges. The rise of the others, as you and I started talking about in 2020, those being the third group of large traders on the Commitment of Traders report that came out of nowhere, thought to be primarily sovereign wealth funds that were standing for delivery all over the place. Um, we see repatriation from the Bank of England and the New York Fed by 40 plus central banks. Bank of India just repatriated almost all of their gold, over 100 plus metric tons since 1991, and they continue to buy more year over year than they did the previous year, taking possession of it all. We see reports all around the place that these central banks are not reporting as much as they are actually taking. Over half of all the gold sales or exports since March have are really unaccounted for. No one knows who bought them. There was something similar in 2021 or 22 where Bloomberg came out and said, you know, you got like all 4, 5, 600 metric tons of gold that have been shipped, and we can only account for about 50% of it. And they assumed the rest were going to the BRICS nations. You have things that are happening, like China buying up doré concentrate from Latin American, South American countries, which disintermediates the marketplace. The how much is being bought, it has far less consequence on the prices. You're seeing huge volume all around the world in all of the other exchanges. How many people know that Dubai, the exchange in Dubai, UAE, just surpassed the LBMA? It's the second most active trading market in the world for gold. And if you take the combined volume of the Shanghai metals and the Shanghai futures, it's right there as well. It is putting the COMEX and the LBMA in serious trouble. We saw this January, we saw massive deliveries in both gold and silver. 50 plus million ounces of silver delivered in January. 15,645 or so contracts in gold. In the month of January, 15,000 contracts. That's almost 50 tons of gold um, coming off. Those are deliveries off of COMEX. And we see states that are doing all of this. And I look at this and it blows my mind that it is so misdirected by the people that tell us what's important. Um, it's unbelievable. Most people don't understand what's really happening. And when we try to explain to them that the softness in the physical market, it's ridiculous. It's the most contrarian indicator I've ever seen. And you're right. Where are all the people? Well, they're into a handful of stocks, 7 of them basically. And you saw what happened, how fragile the whole ecosystem is, right? These guys over there, they're playing in terms of years and decades. And us here in the States, as foolish as it is, where instant gratification really isn't fast enough, where a 30% gain in gold is laughable, where Richard Russell said you make 7 a year, 7%, you're a rock star, over quadrupled that. And it's a joke because it didn't go triple digit in a few weeks or months or um, and this is all happening where everyone's in 7 stocks into Bitcoin and into money markets, 7+ trillion into money markets. You want to talk about a potential rug pull? I mean, you blow up one big bank like Bank of America, where guys like Gregory Mannarino screaming forever that this is a dangerous bank. Ted Butler, while he was still alive, bless his soul, spoke very indignantly about them, though they were the big short in both gold and silver, replacing JP Morgan. A billion ounces short in silver, 40 million ounces short in gold. Blow up a bank like that. Let people really understand what bail-in legislation is and watch how fast the whole system, bang, blows up that fast, where people run to yank their money out of the banks. You think you've seen a scary environment? Watch what happens with a real bank run that blows up the entire system, sends interest rates spiking and bringing everything down. And then you talk about Bitcoin and the one thing I haven't read Catherine's report. I know you sent it to me. I was so busy all day. I want to get to it, but the one thing that I'm concerned about, if it even warrants being concerned, it certainly feels that way to me. I suppose I need to research it more, but with the underpinning of all of the stable coins and treasuries, as the rest of the world has shed treasuries and continues to let them roll off the balance sheet in favor of commodities, real assets, we're all going into Bitcoin. And the central banks aren't just slowing down their acquisition of gold, they're doubling down. The last few months of reported statistics, the end of the year showed a doubling of the 12-month moving average each month. They're not stopping, they are increasing. We see Saudi Arabia, we see China be caught by the import-export numbers. Sorry, we've probably been buying more than we said, or we didn't report that. And if it's bought by the Liberation Army, People's Liberation Army, it's not reported, even though it was purchased by the PBOC. We underreported it. Same thing with what is going to Saudi Arabia. With all of this gold that's unaccounted for, do you really think they're reporting it all? Of course not. They're also the largest producers in the world, the second largest producers of silver in the world. They're doubling down their efforts. We are all misdirected into risk-on assets, and these folks are buying all of the world's commodities. I talked at length. The Chinese bought the London Metals Exchange. They're not just buying precious metals. The London Metals Exchange are all the base metals. Look at all the countries on the Belt Road. Look at Indonesia. Just became a full member of BRICS. What is Indonesia but the largest producer of nickel in the world? Their president, Widodo, said we need to build an OPEC-style cartel for rare earths as well. Everything they are doing is aligning with countries that are either strategically located via sea or land and or have massive supplies of natural resources, many of which are underdeveloped nations and working on these deals. And we're all focused on risk on assets. And it's kind of like the generation of gamblers we are breeding is really not a good idea. You know,
Hmm.
you grew up when we did, you work your ass off to get somewhere. You grind. You let the laws of compounding be your friend. You make a few percent each year. You keep on going, you keep on saving, you keep on grinding. You save, you invest, you reinvest. This is Austrian economics. What we have right now, it's speculation land. And yes, there have been people that have become very wealthy. FOMO is raging. The dopamines that flow from your brain making all this money is raging. And is it right? I don't know. I guess only time will tell. But I'll tell you this: the biggest money in the world, the central banks would say, well, I would say, well, why aren't they doing that? I mean, they talk about it a little bit, but why aren't they doing it? And why are they hiding what they're doing with metals and with commodities? Why are they not being forthright? Why did the most powerful bank in the world reclassify it to begin with as tier one? Then we get to the states. And you're right. Now, Jason and I talk virtually every day, and we talk about this all the time, this growing chorus of states that realize their constituents have been screwed for a long time. And it's time to let them have sound money, and the Constitution allows them to issue gold and silver coins or species. In Jason's argument, digital forms of it as well. That's where we're moving. What does that say? And I would also add, just like we saw the others, which were the sovereign wealth funds, um, who were buying after tier one revision and all the central bank buying and repatriation, their buddies and their wealthy cohorts started buying under the cover of sovereign wealth funds. As this trend continues here in the States, do you not think the people in the know are going to buy every damn thing that is still left unaccounted for? And while there's a massive overhang of inventory right now, lowest premiums I may have ever seen in my career, I can't even believe it. I mean, is the euphoria surrounding Trump getting our culture back that deep? I mean, I get it. I spoke to that as much as anyone. The bizarro world, the nauseating stuff that we saw over the last 4 years. God bless him and guys like Kash Patel and all of the people he's bringing in to restore our culture. God bless him for that. And I feel much better as a father. But you're all making a mistake, and I'm not talking to you out there, but people out there, if they believe that the monetary and fiscal irresponsibilities um, and distortions that were created through all of this over the last several years will not be accounted for. They will. And this is what the rest of the world is doing as we're rushing headlong into the risk trade, maybe at the worst time. So yeah, I mean, you add the states to this mix, I think it could be huge. And maybe that's part of the reason why we saw nearly 16,000 contracts standing for delivery in January for gold. Um, it's an interesting time, Dunagun, for sure. It's an interesting time.
One more news story that has been brought up in the chat is Mario Oneco was bringing up today, and that is the London gold market queues for accessing physical gold have grown from typically a few days to now up
Yep.
to 4 to 8 weeks. And the one explanation that was given was a lot of shipments of gold have been flying from London to New York to try to get stateside before Trump took office because there was anticipation that he may slap tariffs on imports of gold. I don't know if that story is the case, but if I don't know if you know any more about that, but uh, this is something that our viewers are always interested in and you've warned us about this, not only off taking from the exchanges, but here's off taking from the London gold market or the Bank of London. Used to be just days, now it's up to 4 to 8 weeks to get your gold.
Right. That's a bad deal, right? I mean, that's what everyone's saying. There, it used to take 2 to 3 days. Now it takes 4 to 8 weeks. And it's not just from the Bank of England vaults. Evidently, it's from all sorts of vaults all throughout the LBMA network. Um, and what it tells you is that they don't have the gold to make deliveries. It's not taking that long to refine them. It means if they have to refine them, they don't have the gold. And that means the gold that they show that they have is not for sale. No one's getting rid of it. And if they don't have the gold, um, how close are we to some sort of an event where, I don't, I think in London, the numbers that if I remember, David Jensen talked about, they trade twice global annual mine supply per day, every day. In silver, it's 3.5 times annual global mine supply per day. And to his numbers, 90+% of all of these trades are paper naked trades. Now, the theory is that everyone's worried about a 10% import tariff on gold, and more so than silver. The argument against silver is that we're in a supply deficit here in the States, so he won't do it because he has to import it. Don't know if that's true or not, but it would make sense. With gold, on the other hand, you have, I don't know, I haven't looked lately. There's a guy on Twitter that does a great job of showing the rehypothecation of gold, but it was always in the neighborhood of 1,500% or higher. I mean, that's just conservative. It's probably much higher than that. But that means that the contracts are sold over and over and over and over and over again. 15 people have the same contract thinking they have their own contract, is what that would basically mean. And cash settlement is very, very close at that rate. I was talking to a guy the other day at dinner in my community, and he is involved in aluminum and had a force majeure moment where his manufacturing business needs lots of aluminum, had contracts they couldn't deliver, they cash settled. It's force majeure. That's what we're setting up for here. And these players are saying, man, I got all these contracts. And when you have a contract, if I go short and you go long, well, most people just cash settle. Most people like Miles Franklin, 2 bottles of water here. This is 5,000 ounces of gold in my warehouse, 5,000 on COMEX. I sell here. I own physically here. If the price in my warehouse drops by $100, I'm down $500,000 in gold, but I went up 500,000 on what I sold short. I'm not looking to take delivery. I have it covered. A lot of the people are just speculating the way they do in buying stocks or going to the casino, and others are manipulating the market. And they manipulate it by naked shorting because they got massive, massive checkbooks. And maybe they're even being told by the Western elite, go ahead and do this for us, would you? Thank you. And by doing such, remember, you as the long have the right to say, no, 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 no. I'll stand for delivery. Thank you. And that's what we saw in January. Massive deliveries, right? So what if everyone says, I see you guys are screwed. Delivery, please. Now, isn't that what the Hunt brothers did? Sure is. Hunt brothers saw the same exact things, and the exchange changed the rules on them. Said you can go long just 1 million contracts or so. You can go short as much as you want. Please, thank you. I mean, stupidity. But the point of it is that, yes, that is the rumor. But I would look much past that and say what you see are these claims, these promises of delivery in London. You got a whole big vault full of IOUs and a little bit of gold. And I've been saying forever, and maybe this is it. The little boy who cried wolf, here I am. One of these days, wolf will coming, and maybe this is it. Maybe they all say, we got them cornered, y'all. Let's stand for delivery and watch what happens. And that's what they're doing. They're getting it home preemptively in case there are tariffs because they know they cannot come up with the gold. But lo and behold, having the same problem in London with these delivery delays. So, you can only manipulate a market over a very long period of time by pushing it in the direction that it is going. They are trying to hold back the global demand of powers that are as challenging as us, especially when you combine them all together. Their coordination, their motivation, their sophistication, and their wealth have all gone parabolically higher over the past 2 decades. And now I think they're enjoying watching us kind of squirm on this. And no, if they wanted to, they could turn up the heat just like that. But they've been playing the long game so they can get as much as they can. If they turned up the heat that fast, it would have been force majeure a long time ago. The rules would have been changed. So let's beat them at our own game, they're thinking. Do it as long as we can until we have to pull the switch. And then things get very frightening in my mind. And that's the beginning of a reset. One of these big banks, the Western banks, fails to deliver, creates a daisy chain of defaults and of forfeitures and bankruptcies and counterparty risk and credit default swaps and like bringing in AIG into the moment again. And boom, that's how it happens because they don't just own gold. Remember, these banks have a lot of fingers and a lot of pies all around the globe, and they're all incestuously tied together. So, yeah, I mean, I don't want to over dramatize it, but that is ultimately, I think, something you could see happen if the powers that be on the other side of the table really wanted to turn up the heat.
I wanted to follow up. There's a couple of questions in the chat, maybe more than a couple, about platinum. It did come up with our recent interview we did with another guest talking about this uh, unusual. You've always talked to us to watch. You said some of the best profits that you've made in your career have been from noticing abnormalities or anomalies when things were out of whack, whether it's the gold
Yep.
silver ratio, et cetera, or the premiums on numismatics compared to bullion coins, et cetera. What about the platinum to gold ratio and the prospects for we've one of them was a trader saying he's seeing a narrowing cone down in the platinum price, and usually that precedes when it gets down to a point, it either it's going to go one way or the other in terms of a volatility spike. Any thoughts from you on the unusual ratio of platinum to gold and platinum's prospects for industrial use going forward, et cetera, that people should perhaps consider it, even though it's not primarily a monetary metal, excuse
Well,
me.
I mean, with Trump in office, we can, demand for platinum has been relatively stable, if not decreasing, with the electric vehicle craze. They're projected to see a slight increase maybe in platinum mining or production, but the thing of it is, almost all of it is made in or produced in South Africa and in Russia. Staying with Trump and saying, we're not going to get rid of the combustion engine anytime soon. You need platinum for its catalytic converter uses. The thing about it is that they used to be the primary catalyst or catalytic converter, or I guess you call it a catalyst. You're the what's it called? What were you in your previous life?
Physicist, yeah,
Engineer.
and
Yeah.
a
So
manufacturing
so it's
engineer,
called
yeah,
a catalyst, right? Is that what it would be?
yeah, hmm,
Okay.
yeah.
So it is the primary catalyst. Used to be primary catalyst for unleaded vehicles. It's now the primary catalyst for diesel vehicles because when palladium was so much cheaper and has similar properties, they retrofitted everything. Maybe they'll go back to that. The argument is sound, right? I mean, the argument is very sound that it's way out of whack. It is way out of whack, totally. And you got banks like UBS that are forecasting large deficits between supply and demand. In fact, they're saying as much as 500,000 ounces um, could be, you know, continued shortage that much, and it'd be the third consecutive year. So it hasn't been huge, but they're saying it could be higher. Um, to me, I think it's you should own it if you own a significant precious metals portfolio. It's third in line for me behind silver and gold, but it's a sound argument. The biggest issue in the retail side of things is that I had two very large orders at the beginning of the year for platinum, 500 ounces each order, two of them. And when I called the trading desk, they said it's a good thing you called when this is January 1, 2, 3, 4, real early in the year. And well, we're getting our allocations right now, and stuff's getting real hard to get. And so most of the mints have already sent out their allocations or large portions of it. I don't know. Let me see if I can look real quick here. Just a second.
While you're doing that, I just wanted to say in the live chat, you guys probably noticed there's been a lively discussion going on about Bitcoin's virtues or potential pitfalls. One of the virtues that's often touted is its decentralization. Another virtue that's often touted is its fixed limitation of 21 million Bitcoins. Both of those are called into question by Catherine Austin Fitz's article. I put a link to that article in the live chat because she says the those whom she's interviewed, who are numerous, say that $21 million could be changed. It's not a fixed limitation, and the new declaration that about national store of Bitcoin, et cetera, would mean perhaps it would be even more concentrated hands than ever before, which means even though the computing might be distributed, it doesn't mean the ownership of it is. And anyway, that draws into question as far as conflict of interest on those who are holding it. Go
So
ahead.
typically, let me ask you a question. Typically, on an interview like this that we do, how many people view it typically in over the, like if you look back at it
Yeah,
next month?
about 30 to 50,000.
Okay, so this is what I was getting at. United States Mint production for non-proof bullion, American Platinum Eagle coins, has varied over the years. In 2023, the Mint produced 12,700 1-ounce bullion Platinum Eagle. So, you know, 1 out of 4 people watching this video over the next month could buy one platinum coin last in 2023. The 2024 numbers haven't been released yet, but the point of it is that the mints make them in tiny supplies. So they're hard to come by. They sell out fast, and the same thing is true with the UK, with the Perth, with the Austrian mint and the Canadian mint. They don't make many. They're hard to come by. They're worth owning some, and if you know if you believe in anomalies in historical anomalies, price ratio, et cetera, it's a hell of a buy. Um, One of the crazy things that is hard for people to deal with, and they dismiss so much of what they believed at one point, is because logic and mathematics, and they've had a kind of a counterbalance or a counter. They haven't been, logic has been contrary to outcome for quite some time. And what's the old saying? The market can stay irrational longer than one can stay solvent. And but yes, I like it. It's a good value, but you're going to pay higher premiums than you would like, higher premiums than you would pay in gold and silver in terms of comparatively right now,
Hmm.
because the U.S. Mint will make 100 times the amount of gold eagles that they did platinum eagles in a year. If not, well, they'll make well over 1 million of them in 1 ounce plus half quarter and 10th ounce. They don't, since 2008, the U.S. Mint has not made any fractional platinum eagles to my knowledge. And in 2008 was the last year really that I remember getting platinum eagles with any ease. So like it, but maybe tread a little lightly on how much you add to your portfolio.
Looking in our live chat, still very lively there. A lot about platinum, a lot about
Hope I'm not
Bitcoin.
making anyone angry.
No, no,
Good.
I mean it's lively
Yes.
because there people are getting a lot of counter currents of information from various sources, for example, about Bitcoin, and it can be daunting to try to feel like you're staying on the right on top of that. Uh, there's a question about well, that's one question was the if the consortium of states 20 about to be 23 right now they look like they're going to be petitioning for a declaration by the Supreme Court that they should get rid of the capital gains tax as collectibles on gold and silver if they can prove that this is transactional, because it can be made that way. Um, then what do you see foresee that if that were to pass, that it would impact the retail demand for physical precious metals
But it
if
would only be non-taxable if you used it to buy things. So if you buy $10 million worth of gold and try to sell it all at once, does that mean you have capital gains? Or does it not? Just because it is transactional. That would be the question that I would want to ask. And you know, when you talk about it being transactional, the way that the law current, I mean, we're a long ways away. Just like Bitcoin, everyone always talked about, well, it has to become more adopted. Anything has to be adopted. We have to kind of relearn our history, because the way that most of the laws read, Dunnigan, is that, well, you know, you're a barber in Texas. Well, I can pay you in gold if you'll take it. You may not want it. You're not required to take it. I can go pay my
Mhm.
property tax with it.
Mhm.
They'll take it, but if you don't want to take it, you don't have to. Now, if we get to a point where the state says this is money in a digital form, and if you do take it, there is a way for you to immediately convert it into dollars. That's kind of like how we take Bitcoin right now from the
Through the
public.
bit
We don't
fade.
take it.
Yeah.
We issue them a BitPay link. BitPay processes it and immediately wires us the US dollars. So, um, kind of the same thing. So we're still a ways away from that mass adoption. And the truth of the matter is, man, I mean, I don't know how many people would know a gold coin if it fell on their foot. Certainly a silver coin would be less and less. But point of it is that if Rick Rule, who, you know, we both hold in the highest of esteem, were to say there's only 0.5% allocation from Joe and Jane Sixpack to the Harvard Endowment Fund in terms of asset allocation, well, we're a long way from mass adoption and that kind of thing. Even in the face of states moving in this direction, what we should take away from it is not only are the states moving in this way, which is a very positive sign. Judy Shelton will probably be on the Federal Reserve Board. She is advocating for 50-year treasuries backed by gold. She talks about stable coins that she wants to be pegged against the 50-year treasury. Scott Bessent, the Treasury Secretary's largest holding, is in gold. Cynthia Loomis, the senator from Wyoming, says, let's revalue gold. Never in my career have I heard so many people at such high places
Hmm.
mentioning the word gold. So just like we heard about Bitcoin way back when, and it started to get louder and louder and louder and louder, and well, maybe that's what will happen here too. That's what my hope is. Maybe all of us who have been wearing the tinfoil hat for a long time will be vindicated from a standpoint of just being early. And I've been early my whole life as a businessman, always early. But I mean, in the end, I can tell you that, yeah, I may have missed out on some stuff, but I am thoroughly happy that I did what I did when I did it. And being a few years early is a lot better than being just a few seconds late, period.
We have a question here from Niels Han Dynasty. Question: what does Andy think of China buying 2.5 million ounces of platinum last year for a new type of car engine?
I wonder if that's the hydrogen engine. I'm not sure. I wasn't aware of that, to be honest with you. Um, but it doesn't surprise me at all. I think that China is not just focused on gold and silver. Like I said earlier, they bought the London Metals Exchange. They're partnering with all of the rare earth countries in Africa and adding them to their Belt Road, and they refine 100%. They're buying up anything they can from future production to current inventory to what's coming out of the ground, even the byproduct sludge and the doré, and they're buying everything they can. It
Hmm.
doesn't have to be gold and silver. It can be anything that you need. I mean, I think of like those video games that you always see the commercial, World of Warcraft or whatever it is. I see them all the time where on your phone, you start with a hammer and you build your city, and then you get to a point where now you get a drill and you build it, goes from straw to wood to brick to you build a whole big thriving city and a metropolis, right? And but that's what this is. This is Zoltan Pozar, Bretton Woods 3, isn't it? He who makes the rules has the commodities. It used to be he who has the gold makes the commodity or makes the rules. Sure, that's true. But he who has the commodities makes the rules. And it's not just the gold, it's everything. And they're using the fact that we've distorted so much through suppressed interest rates and asset prices that were only really driven towards financial assets, ignoring the commodities, and they realized that was the Achilles heel. I do believe that. They realized that was the Achilles heel, and they have gone at it in a incredibly methodical way that has allowed them to,
Hmm.
in essence, begin to corner everything and their partnerships and their relationships. And, you know, yeah, I think to underestimate the significance of all this is a big mistake, and to underestimate China and what they're doing, just focusing on gold and silver, is a very big mistake. It will be everything from platinum to steel to copper to oil to natural gas to whatever they can, and then the routes to get there and the whether they be on land or sea, and if we have to build the infrastructure to get from point A to point B, well, guess what? We'll be happy to do that for a little bit of what you're pulling out of the ground. That's the long game. We don't do any of that
Hmm.
stuff. And that will over time, there'll be a problem.
I want to share a window here that is our specials for the week because that you've been talking about for our viewers for several weeks, and it looks like it finally showed up, which was some pre-33 gold.
Well, we have a
Uh,
lot more than what is here.
Let me
And
show you this
it's
one.
just been a long process, but it's all in-house right now.
So let's talk about this one, the $20 St. Gaudens at $50 over melt per coin. Let's just hit that right now while it says melt on the screen because I get questions on that every single week. People ask, what's the difference between melt and spot?
Well, I mean, spot's an ounce of gold, so you could say spot, let's say is $2,760 an ounce right now. That's spot, but the $20 gold piece is a hair under an ounce. So 2760 times 0.9765, I think it is.
9675, yeah.
2695 is melt value on that right now. Plus 50 means you're at 2745, you're under spot. When I tell you, as God is my witness, my career, I never saw this. Never. These coins in 2008 and 9, um, these the AUs? Yeah. So the AUs, I would have paid you $400 over $1,000 spot, as many as you'd sell me. I would have paid you a 40% premium. At the same time, I would have traded you gold eagles back at a 6% or 5%. And that's what I did for 2 years. I flew all around America, buying back people's numismatics because when Obama took office, premiums went parabolic. I guess they thought he was going to confiscate. Everyone did. And there were 2 or 3 or 4 auction galleries that were making these massive bids. So I'd call a guy up like you, Dunagun, and say, listen, man, we've been doing business a long time. You have 1,000 of those AU Saints. Here's what's going to happen. And you better not say no because I've never seen anything like this. I'm going to fly out to your house with 1,400 gold eagles. I'm going to swap them out. I'm going to sell these back to the auction galleries that want to buy them. When you bought those, you might have gotten, 7, 8% more gold, not 40%. And so markets move in a pendulum. At that point, it was as overvalued as I've ever seen. And now it's as undervalued as I've ever seen. I've never seen this before. So hell of a value. Really, truly hell of a value. I mean that sincerely.
After that one, the rest might seem tame. Some of these are repeats from weeks
They're all
before.
boring, but I mean,
One,
this is a
one
this
ounce
is a
silver
very good
Philharmonics
deal.
at 285 over
Yeah, it's
spot.
a great deal. Boring, but a great deal. It's a great
90,
deal.
90% constitutional silver.
That's
That's never
not
boring.
boring, and that's a damn good deal. Again, because this is the same thing, I mean, during the pandemic, premiums were 14, 13, 12. Buck 69 over is as cheap as you would buy it any time in my career. It's a good deal.
And just to clarify
Maybe the
pricing on
best deal in
this,
silver, period, right now.
well, for one thing, it's the cheapest way to buy any coin from the U.S. Mint, right? It's
Yeah. And
$1.69
it's
over
made by the
spot.
Treasury, not it's not a Federal Reserve. I mean, the whole thing is just I think it's the best value in silver, period, period, period.
1 ounce gold, one tenth ounce, pardon me, one tenth ounce
Boring,
Gold
but
Britannia
good
is
value. I mean, I don't mean to
29.99
say
over
boring.
melt.
I'm just simply saying they're boring, but the $20 gold pieces aren't. And over the next few weeks, I will start every week have nothing but numismatics to special.
All
Lots
right,
of
so
them.
we're going to
But
go right
I,
back to
I
that
need
one
to do
second.
this the right way.
1 ounce gold maples, 59
Well, now
over
this
spot.
is
That's a
boring
carryover.
too, but it's a hell of a price. I mean, people pay more for gold bars than they do for these. So that's a really good price. When you're talking about that's 2% over spot, man. I mean, I haven't seen that in my career. So with $1,000 gold, that would mean you're paying $1,020, right? For that coin. So now with it being much higher, it's even under 2%. That's real close with about 2%. But that's just as cheap as I've ever seen them ever. And that's what I was saying earlier. It's so strange to me that you're seeing the mines or the mints, the LBMA, the Comex being bled dry, all of the world's exchanges, Brazil, um, um, United Arab Emirates, the Shanghai Metals Exchange, they're all being bled dry. And yet the retail public is being misdirected. Are they? Or do they know what the world doesn't? Don't know. I guess we'll find out.
So if you guys have been waiting for a chance to get your hands on some, an AU is a pretty darn good grade. That's
Well, and let
almost
me say one more
uncirculated.
thing, Dunnigan. I don't mean to interrupt you.
Go
If
ahead.
you guys are out there and you want more than just AU, we have a lot in stock, and we haven't gone through them the right way yet to get them listed. If you want something other than these, reach out to who you talk to at Miles Franklin or Dunagun and Elijah and Kaiser or whoever you talk to, and let them know what you're looking for. I would say chances are we have whatever you're looking for, and you will be blown away by the price. And this is part of the reason I don't like to always publish my prices. People look at it the wrong way. I have a list of reasons why I don't like to, but I am telling you that nobody will be able to compete with what we have in the pre-33 numismatic, which I would tell you it is my favorite way of owning gold, period. And I never really have talked about it on your show for the 4 years we've been doing this because I didn't feel it was right with the price. And everything is about getting the right price. For most of my career, no one bought bullion. From 1990 through 2002, 3, 4, 5, say actually about 2008. So from 1990 to 2008, almost 20 years, no one bought it. The second half, so about a third, two-thirds, no, about a quarter. Well, I don't know. I've been doing this for 35 years next month. So just under half of, or over half of my career, no one bought bullion. They only bought numismatics. The second half, we only talked about bullion. This is the best deal I've seen maybe in my career. And I'm dead serious on that.
And just they're still wanting a little bit of clarification about the difference between spot versus melt. So just to in a nutshell, guys, spot is always the price at which 1 ounce of precious metal is being traded for on the major exchanges. Melt is that fraction of an ounce of value,
Or over announced, 10
or
ounce.
it's the actual weight value of if you have something that doesn't weigh 1 ounce, if you were to what's the actual value of the metal in that thing? So if it's 2 ounce coin, it'd be twice the spot price. If it's a
And
half
you could
ounce coin,
say
it'd be half the spot price.
a 1 ounce coin, their spot and their melt are the same.
Yep, they are
In
the
a
same.
half
So it's
ounce coin spot, you could say spot divided by two, or in a 2 ounce coin, you could say spot times two. We just like to say melt. And it does confuse people, but once they understand it, they're like, oh, yeah, that makes sense.
you just multiply the weight of the thing times the spot price in ounces, and you get the melt value. So
Yeah,
a 10th ounce coin, the melt value, if you were to melt it, it would be worth 1/10 of the 1 ounce spot price. It's that
correct.
simple. So, all right. I think we've got it wrapped for
Don't go,
tonight.
Dunnigan. I need a friend. Don't go.
We're always here for you, Andy,
Thank you,
and
buddy.
we're grateful. We have currently 681 concurrent viewers. We were at 800 and so just a few moments ago before we spent quite a bit of time talking about the specials. But they come. Our viewers are here, guys. It's you as the viewers and the subscribers who make our channel possible. This is how it works, and we're grateful for all of you. And as Andy was exhorting all of us, we need to share this video and this knowledge with those that we care about, if we can, with our family, coworkers, neighbors, friends, anybody who hasn't heard this, because they're not going to hear this on the mainstream financial press at
No,
all.
you're not.
And you get it here at Liberty and Finance. You get it from Andy on this weekly market update. So if you're not a subscriber, and half of our viewers are not subscribers, make sure you just click the subscribe button on YouTube. I was going to dig it out on my desk here, the plaque that YouTube gave us, which was pretty cool for passing
Nice job.
100,000. This was from 100,000 subscribers. We got this plaque, and there are higher levels we'd love to be able to attain with your help. And the real point is not the plaque. The real point is making sure that more and more people find out how to prepare themselves, how to take care of the business for their families in a way that is reasonable and based on truth, based on sound money, uh, and not be taken advantage of by this corrupt system that drains through inflation, intentionally drains our earnings, our savings, and our retirements. So, Andy, you've been a big part always of helping to keep us on the right side of the truth and finding out what's really going on. And we were looking forward to having you again back next week. And thank you everybody for being here. Andy, if people want to see your podcast that you've been doing, when and where should they get tied in?
But that's thank you, Dunagun. I think next week I'm going to be out of town. I'm so sorry. I'm going to be in Colorado next week, the whole week. I'll do my best to do a workaround. We'll come back to that. But the best way to find me would be through our YouTube channel is Little by Little. Very easy to find and shocking. That's Little by Little. You know, that's my favorite phrase, little by little, then all at once. Little by little on Miles Franklin YouTube channel. And I appreciate that so much, Dunagun. I've so much always enjoy our conversations, and I find them cathartic. So look forward to picking up real soon where we left off. And thanks again. Stay well. You too, everyone.